trading at its best.
So welcome to the Forex Weekly webinar today. I'm Mike Swanson, and I've been teaching traders for a little over 5 years, trading for about 10 years, and the lesson you're going to learn today kind of goes along with what a lot of you are probably watching, the non-farm payroll. So I'm going to be teaching you, why does the non-farm payroll cause volatility? Now, a lot of you are probably thinking, well, I know that, but I'm going to show you a little bit different angle that you might not have realized and explain a few things about, why spreads widen, and just some different things that you might not have realized. So we're also going to talk about what is non-farm payroll, if you don't know what it is at all, if you're a new trader, and like I say, why it causes volatility, the most important part. And then, of course, we'll get into our Q&A. We break that up separately towards the end. So let's talk about what is non-farm payroll. Well, it's a major statistical news release. It comes out once a month, usually the first Friday of the month. Sometimes they'll reschedule it, but most of the time it's the first Friday of the month. Okay, so you always want to be careful that you're aware of that event. So it's usually, like I say, that first Friday. You can go to Forex Factory, or you can use our Informer tool to see when it comes out. But this is a news release that covers about, the statistic covers about 80% of the workers who produce the entire gross domestic product of the United States. So it's a pretty big deal. It's used by the government, economists, and traders, both stock traders, futures traders, Forex traders, everybody is usually, keeping tabs on what that number is and how it's affecting the economy. So they also use it to forecast the future of the economy. And this usually about the same time you get the jobless claims number, the unemployment rate, so that you can see another indicator of where the economy is going. Okay, so that's kind of just a really quick summary of what the non-farm payroll is. You can read more about it. There's all kinds of articles about non-farm payroll out there, but I just wanted to get you the basics, because that's all you really need to know, I think, to use it, or to know how to avoid it if you're a new trader and you don't know how to set up strategies for non-farm payroll. So now let's talk about the important part. Why does it cause high volatility? Well, here's the thing. Most traders plan their trades around the non-farm payroll, NFP. So because of that, there's a lot of players involved. It causes an increase in volume, or after the event, a decrease before. Usually the week before the event, things can be really slow, and it's difficult to forecast, and this will result in those large deviations from the actual number that gets released. So because of that, when it comes out, it can kind of shock the market. Maybe the unemployment comes out really high and the non-farm comes out really low, and that can have a big impact on the markets, because it's hard to forecast. It wasn't factored into the market. So the key thing here of why it actually causes the markets to swing so rapidly is because traders are actually widening or deleting their stops and targets, or their pending orders to get into the market. They're usually deleting those before the release comes out, so that way they're not caught in that volatility. They just know the nature of this event, that they don't want to get stopped out prematurely or put into the market and whipsawed around. So that is actually what helps contribute to all of that volatility. It's kind of ironic in a way that that's actually what's causing it. Okay, it's what causes spreads to widen. When traders remove pending orders from the market, those pending orders were acting as liquidity. So you've got less liquidity on the market to trade with. Okay, then after the event, you've got short-term traders that are quickly entering and exiting the market. So once that news is released, you've got scalpers getting in there, buying the top, buying the bottom and trying to ride it back up. You've got people taking profits. It's just a lot of action is happening at that moment. And where the rest of the day it's kind of quiet. So everybody comes out and starts taking action that's in the short-term trades. So you'll see that fast price movement and those large moves because of that lack of liquidity. So due to that lack of liquidity, the markets go, just go crazy, and you've got whipsaws, you've got people getting stopped out on both sides, and that's what's really causing all of this. It's really just that traders are, you could say, afraid to get into the market until they know that number. So things can go really crazy as they get back in and make their plan things out for the next day or the next week, depending on what type of trader they are. So let's help put an image to all of this with the Informer tool. Okay, we have a market sentiment tab here on the Informer tool. If you don't have this program, it's a free tool we allow our followers to use. So you can download it. I'll get you the link here in just a minute. But you'll want to go to the Market Sentiment tab, and this is where you'll find a little chart. Now this is just a snapshot. This is just an image provided by a broker with a lot of liquidity sources, so we can see a good chunk of the market's pending orders. I've got several other trainings on the blog at TradeWestForex.com/blog about market sentiment. So we're not going to get into what all this stuff means. You can go back and review those. I'm just going to show you what happens when the news comes out. Okay, let's go look at the best example today was the euro. It's a very popular pair to trade. So I've seen it has the biggest effect. The Non-Farm Payroll has the biggest effect on it. So the news came out at 8:30 a.m. Eastern. Okay, so that's going to be, let's go ahead and show you where that's at on this chart. Okay, that's actually going to be about right here. That little marker is 8:30. So if you carry that down, that's about right here. Now, do you see the difference when that news came out of what, can you see what's happening here? If you know that the green and red areas are significant, orders or liquidity in the market, if these are buy orders down here, this dark area, and these are sell orders, and then you've got a little bit less orders, right near the price, okay, all of that was happening several hours and even 24 hours before. Look how the market was trading. We had liquidity on both sides really close to the market, just keeping it in a range as traders prepared for this news event. Okay, and then watch what happened right here at that 8:30, or as we got right up close to it. It started to separate, the buyers and sellers started deleting and removing their orders and moving them around. So now you've got this white area here on both sides. Do you see how it opened up? You've now got all this space, which is telling you that's that lack of liquidity I was telling you about. A lack of liquidity because people are waiting to see what happens, and that's what actually is causing it to be able to move so rapidly and take such large moves, is because there's not a lot of support and resistance. This is real support and resistance on the market. This is not your indicators telling you there's a chance there's support here. These are actual traders' orders sitting here. These dark areas mean there's a lot more orders, and when they're green, it means they are buy orders. They're going to cause support. This red area is sell orders causing resistance. This could be traders wanting to get into a sell trade. This could be buyers trying to take profits, or it could be buyers with stop losses for buyers up here. So, there's all kinds of things that could be, but it's all sell orders here and buy orders here, which cause that real support and resistance. Okay, so like I say, obviously what's going to happen is when those get further and further away from price, it's easier for the market to come in and move the price. So when the news comes out, the market just takes off. And then it easily can whipsaw and go the other direction, because look at this. You've got all of this area, and that's exactly what it did. It kept right within those support and resistance areas, and then look at here. And now as we get towards the end of the day, what's happening? It's going back to normal. You've got this tight band now. You've got, buyers are starting to establish more positions in here. You can see you're seeing more buyers move it up closer and closer to price. And we're getting up here near where the sell orders were at. Okay, so this is very valuable just to understand the concepts of why what causes volatility in general, but I thought it would be good to have a lesson today to show you how the non-farm payroll affects all of this, and it just makes a very clear picture to see this, to see why spreads are widening and why it's moving so fast. So hopefully this lesson wasn't too complicated or too difficult to understand. Like I say, we definitely record these. You can go back and review, and right now we're about to go into the Q&A to help clarify anything you don't understand. So let's go ahead and do that. Let me bring these up here. Before we do that, though, let's go ahead and one more thing. I want to get you those links. Make sure you have the links to the blog where we post the replays. Okay, I write a little post on the topic of the day, and I post the video on there, and we shoot out an email and release a message on Informer when it's ready, which is usually on Monday morning. Okay, so that's just TradeWestForex.com/blog. And then the tool I was just showing you, there's many other things on it. It's like a full trading platform with the exception of charting that we're working on. So you can download the tool at TradeWestForex.com/Informer. Okay, so that's going to be it for the lesson. Now we're going to go into the Q&A and make sure this all makes sense, that everything we've talked about, and show you some more examples if you'd like on other pairs.